Oh man, Bitcoin responds this weekend, bouncing at 26.2k, now back above 27k, but there is a huge trap in the charts which I have to make you guys aware about. Smash up likes, don't forget to subscribe. This chart pattern, as you can see guys, on the weekly time frame has delivered exactly what we've been calling for many weeks. As this price action was running towards 31,000, when people were calling for 40 and 50, I kept saying, guys, this has been an extended run from 19,500 up towards 31. We had no breather. Would I ask you to run a marathon without taking a little bit of a break, right? You got to pull back, come back into the EMA ribbon. Finally, we've got that. This is why you don't chase green candles at 31k. You wait for area of strength. And this week, if you were nibbling, if you were DCAing, you're getting a nice DCA at 25,800 on the low on this candle when it touched the EMA ribbon. Now we're at a crucial moment. Right? Look at the weekly RSI. There is plenty of room for the bears to continue their onslaught. We're nowhere near oversold territory right now. Fear and greed index has notched down into neutral now. So some of that FOMO, some of that greed is starting to come off, right? The cream on top of the cake is starting to fall away and people start panicking. But Bitcoin is responding. And if I drop down to the daily chart, you're going to see exactly what I mean. Right? On Friday, you saw here a big doji candle. If you're following the TA course, ijaz.uk/TA, what would this trigger in your head? Reversal pattern, right? Big volume, big fight here. The bears pushed it all the way down to 25,800, but the bulls closed this candle back at 26,800. They bought the dip, in other words. So the bulls are saying we didn't want to fall lower than 25,800, and you can see they've started buying the dip. Now, very important. This is weekend volume. What do we say about weekend volume? You can't trust it. If this trend continues tomorrow on a Monday, then okay, fine, the bulls are really responding. But chances are, the bears could be taking a breather, letting the bulls have a moment. Look at the RSI. The RSI is not in oversold territory. The green line represents oversold territory. If you fall into the green bands, then you can say, okay, the price is oversold. But that's not where we are currently. Okay, so the bears could be taking a moment off. They could be waiting, letting the bulls have a moment here, to maybe even towards the daily EMA ribbon, before another attempt back down to 26 and back down to 25. So what I don't want is everybody to be aping in right now, getting really excited and thinking, oh look, the bulls are strong. No, we broke down from the symmetrical triangle pattern. We monitored this for a while. Clean breakdown to the downside, decent volume, and you start working towards your price target at 25,100. Now, of course, there's been some support coming in here. But what if the bears want to call off before then working their way to the target? Now, when this... there's only one way this can now be invalidated, and that is if you get above the apex of this triangle. The apex of the triangle sits here at 28,600 roughly. If the bulls over the next few days can work their way back above this apex, then you can say, okay, this symmetrical triangle is broken down. Until then, the bears could just be sitting, waiting to then snipe back to the downside. Be very, very careful on this pattern. Also, what do you notice on the daily EMA ribbon? Right? If you clear out all the diagrams, it's very simple. The bulls could just be trying to run into the EMA ribbon before again getting rejected to the downside. So on the daily chart, it's clear that the bears have a strong grasp of the price action right now. They're in control whether we like it or not. Now, where the bulls continue to be in charge is on the weekly time frame. Right? We still control, as bulls, we still control our destiny on the weekly time frame. And the way we're going to control our destiny is by making sure we do not close below this EMA ribbon. We need to make sure we do not close below 24,800, which is where this weekly EMA ribbon, the bottom of it, comes in at. If we close below then, we've lost our weekly EMA ribbon, and a lot of this work would have been futile. If instead, and this is the fine lines of technical analysis, if instead we can't hold that EMA ribbon, and we bounce and go above 31, which is what we want, because we would have called off, the bulls would have called off, taken a break, and then had their move back above 31, because they were struggling at 31. The bulls were running out of steam at 31. They just couldn't get through there, right, on this candle a couple of weeks ago. If they can then bounce and go do that with regrouped energy, then this would have been a beautiful retest, and long-term is favorable for Bitcoin. Because all this time, Bitcoin was getting rejected around this 25 to 26 level. Rejected, rejected here. So to finally break through it on this huge week here, and then come back and retest it for a bigger move to the upside, is long-term really good. But of course you're playing with fire. It's never fun when the price is pulling back this much into the EMA ribbon and you're scared that you can lose your weekly EMA ribbon. So it's a very important level. Bulls will need to step in. And if they can step in now and go above the apex of the triangle like I just showed you and go above 31 now, great. If it needs to pull back even deeper into the EMA ribbon, I'm personally going to look for more entries into that EMA ribbon for further buy. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. What other patterns are we looking at? Well, you guys know that we were looking at the Fibonacci ratios. So again, let's look at the Fibonacci extensions. Let's remove the EMA ribbon just to make it a little bit tidier. And you can see here that we are starting to work our way and bounce in the golden pocket, right? Remember, golden pocket, the 0.618 to 0.65 level is considered a very important level to hold support. We held support here previously, we held it again, and now just a bit lower in the pocket, we're holding support for now. If we lose it, you can see that my yellow line suggests we'll come down to the next level, which is the 0.5 level, which sits at 25,400. No coincidence that it's 25,000 range again. Okay, again, if the Fibonacci ratio doesn't make sense to you, the extensions don't make sense, a little bit complicated, ijaz.uk/TA, go straight into the Fibonacci chapter completely free, and that way you will learn exactly how to play around with this, how to get it set up, how to use it on your charts, and add to your trading ability. Okay, but that's not it. We also had this head and shoulders pattern, a bearish reversal pattern. And this is the one that, again, has a price target of 24,000. This would be nasty, guys. If this breaks down to 24,000, this would then mean, like we just explained, we'll be below, look where that yellow, green line takes you, below our weekly EMA ribbon. So we do not want this to play out all the way. But again, just so you're familiar, we are breaking down. Now again, with a head and shoulders pattern, just like I said, it's a trap, right? Sometimes you think, oh, look, it's green, we're reversing, this head and shoulders pattern not going down anymore. No, it can retest, boom, and it can come back down, right? So on a head and shoulders pattern, you're not out of the woods until you get above the apex and retest it this way, and on you go past 31. That's what you need on the head and shoulders pattern. So again, you're not out of the woods until you get into that 28,000 territory for this head and shoulders pattern. Okay, let's also take a look at the Bollinger Band. It's been a little while since we've looked at the daily chart Bollinger Band, so let's clear off some of these. Let's apply the Bollinger Band. Again, if this is not familiar to you, ijaz.uk/TA, whole chapter on Bollinger Bands. Who else has done that for free? What do you notice here on the daily chart? You have come into the bottom of your Bollinger Band. There's no surprise why on Friday there was a doji candle and why support came in. Because you're at the bottom of your Bollinger Band. You trade it from the top to the bottom of your Bollinger Band. I've got a video here on how you can make $100 a day just playing this strategy. Waiting for here, waiting for the crossover, trading it to the top of the Bollinger Band. Waiting here, trading it back down to the bottom of the Bollinger Band. Trade it back to the top, right? It's so repetitive, and you can do that and trade and make these profits every single day. So again, you're responding from the Bollinger Band. Now, two things can happen here. Bulls can respond and maybe work its way to the middle line, 28,300, but there'll be more resistance there. Okay, and that is the key of the battle now. So for the bulls to take full charge, like I just showed you, they've got to get above that symmetrical triangle pattern I showed you. But more importantly, work to the top of this Bollinger Band. Work towards the top of the Bollinger Band, which sits at 30,000. But we know that 30,000 is important resistance. But at least that would invalidate the head and shoulders pattern. It will validate the symmetrical triangle pattern, and it will show that bulls have more about them than the bears previously would have thought. So that's what we're seeing here on the daily chart. Let's then look at the weekly chart, because it's showing you the opposite, right? Because on the weekly chart, the bears still have room to move down. Where does that center of the Bollinger Band come in? Can you see that? 24,600. So ideally here, the bulls cannot afford to even let it get to the middle line here. That's the final call here. It can get to the middle line. The bulls have to step up and push it back onwards. Otherwise, it's going to lose the weekly EMA ribbon. Remember what we spoke about? Look at that. The middle of the Bollinger Band is in complete confluence with the EMA ribbon. So we're not making this stuff up. More and more indicators are stacking up, telling us that these are important levels. Now, from a fundamental perspective, we know there's a lot going on. We know regulation is attacking Bitcoin. We know liquidity is causing a problem. We know that we're looking towards the interest rates and saying, okay, what's going to happen at the next rate hike, right? Are we going to get a pause? Majority of the market is expecting a pause. We'll look to that. That's on the 14th of June. We're going to get another CPI reading before then. So there's a lot to play for. But one thing we do know, this liquidity is affecting the market. We spoke about Binance leaving Canada. We spoke about Jump Capital and also Jane Street, right, leaving the US markets as market makers. That's going to make it difficult for people to on-ramp, and that's going to cause some problems. So there's a whole bunch of political games going on. We know there's a debt ceiling crisis as well. But if you can navigate this, if you can remove the emotions, if we get a dip, you look for opportunity to DCA. If we get a pump, you don't chase those green candles, you're going to be just fine. Hope you guys enjoyed the video. Don't forget to smash the likes. Don't forget to subscribe. Don't forget to go watch this video here to learn how to make $100 a day trading that Bollinger Band strategy. And I'll see you in the next one.